The most recent jobs report in 2025 is causing ripples throughout the financial community. Economists, investors, and policymakers alike are all intently monitoring what these new figures say about the vitality and direction of the economy. This month's report has unveiled a combination of surprises and worries that may help determine market choices and economic planning in the coming months. Based on the data, the unemployment level has risen slightly from the last quarter. Although hiring activity in some sectors such as healthcare, technology, and logistics continues to hold steady, sectors such as manufacturing and retail have displayed significant slowing down in recruitment activities. The shift implies more profound structural developments in the labor market. Wage increases have also slowed, which suggests that employment opportunities do exist, but firms are reluctant to raise pay much. This could be because of inflationary trends and prudent corporate planning. Employees are experiencing a tighter squeeze on their finances, particularly in expensive urban areas where wage stagnation is not keeping pace with increasing living costs. Another prominent highlight is the growth of part-time and freelance labor. The gig economy keeps growing, but it poses a threat to job security and access to benefits for millions of Americans. While full-time jobs decline in certain sectors, more are resorting to temporary or flexible employment to remain financially stable. Economists cite a number of factors behind these developments. Rising interest rates, changing consumer tastes, and worldwide economic uncertainty have led to caution among businesses. Some firms have stopped recruiting while others are streamlining operations to trim expenses. This caution is being reflected emphatically in the current jobs data. While these are difficult times, there are glimmers of hope as well. Industries such as clean energy, artificial intelligence, and cybersecurity are recruiting and investing in talent development. Fiscal incentives and private investment are driving innovation in these sectors, opening up fresh opportunities for talented individuals. The report also points to a disturbing trend. Labor participation rates among young adults decreased slightly. Experts attribute this to the increasing expense of schooling, job dissatisfaction, and seeking entrepreneurial opportunities rather than traditional employment. This shift could have long-term effects on the dynamics of the workforce. Investors have responded guardedly to the report. Stock markets registered small movements following its release, with technology and energy stocks maintaining their steady positions, but retail and industrial sectors falling. Analysts are warning investors to diversify portfolios and see developments in subsequent reports before taking bold steps. For policymakers, the report is a call to action. The pressure is mounting for policymakers to bring in targeted reforms, risk-killing schemes, wage subsidies, and incentives for small business to stabilize employment and underpin growth. Without action, imbalances in the labor market could continue to open up. As we progress further into 2025, everyone's eyes will be focused on job levels. The state of employment impacts individual families but is also the most important gauge of the overall economy's well-being. This report provides essential information, but also asks pressing questions that will shape the year to come.